Internal Revenue Service IRS tax news. Here are reasons taxpayers should file a 2020 federal tax return and why e-file is best. COVID Tax Tip 2021-13, February 4th, 2021. Most people with gross income of $12,400 or more must file a federal tax return. Some people with a lower income are not required to file. However, these individuals should still consider filing for a refund of federal income tax withheld. They may also be eligible for certain tax credits like the earned income tax credit, the recovery rebate credit, and others. Let's see if we can break that down a little bit further. Note that most people, if they earn under a certain threshold, you might say, why do I need to file? I don't really need to file because I didn't make a whole lot of income. I'm not going to owe any taxes. And you might then look up and say, hey, do I have to file with the IRS? And the answer you might receive if you make something under the $12,400 could be that no, you're not required to file. But that doesn't necessarily mean that you don't want to file. You might have benefits still from filing. In other words, if you're asking the IRS is basically the standpoint of whether or not you need to file is based on whether or not the IRS is going to penalize you if you're not filing. So if you're not required to file, according to the IRS, mainly what that means is if you're under a certain threshold, the IRS won't charge you penalties and interest and come after you if you don't file. But it doesn't mean that you wouldn't still benefit from filing. So even if you're not required to file, you still want to consider, is it worth my time then to file? The IRS isn't going to come after me if I don't, but I still may want to file. Why? Because you still might get money back. Now, the first thing you might think that you're going to get back would be whatever income that you had, withholdings would be on it. Meaning if you have W-2 income, then they had to take out some withholdings because you gave them the W-4, so most likely there are some withholdings that you would get back if you were to file. So that's number one. You might look at that and say, well, I mean, I didn't make that much money. The withholdings are not going to be that high. So what's the point of filing to get like $24 back or something like that in the withholdings I have? Well, there still could be other reasons. For example, credits could be applied as well. And we're looking mainly at the credits that would be refundable tax credits. Refundable tax credits, the big one would be the earned income tax credit. So if you had any earned income in 2020, then you may still get something more than the refund because you might qualify for an earned income tax credit, which is actually money back. It's not even a refund. So a refund is kind of like a misnomer when you're talking to the earned income credit, at least when you're talking about the refundable portion, because that portion means you're basically going past the liability level. So it's basically a benefit program or at that point in time. So the earned income credit, I mean, you might want to check it out. So if you're under the threshold, you may still get some money back, and you may get a substantial amount possibly because of refundable credits like the earned income credit, possibly a child tax credit if that's going to be applicable. And then if you did not get the full amount of the recovery rebate, or you didn't get the full amount of the economic impact payments, the stimulus payments round 1 and round 2 during 2020, the remedy for that is to file the 2020 tax return and pick up the recovery rebate credit, which is basically the same thing as the earned income tax credit, but it's kind of like the thing that's going to adjust for any problems. So anybody who didn't get the earned income credit during the year should still file, even though they're not possibly required to, meaning you might be still under the threshold. You may have no other reason to file the tax return, but you didn't get the proper earned income tax credit. Therefore, you need to file so you can pick up the recovery rebate credit on the tax return. Note that at one time, filing was a lot more difficult, especially with something like an earned income tax credit, these refundable tax credit. The earned income tax credit is quite complicated. The recovery rebate credit is kind of like a new thing, so it's a little bit complicated as well, especially the term being different between the recovery rebate credit and the stimulus payment, which are basically linked together in some way. So it used to be a little bit difficult to do that by hand, right? But now there's software to do that. So the software makes it a lot easier to kind of fill out your tax return. And many of the software providers provide a free option if your income is below a certain threshold. And you can find those offers through the IRS website. So it's probably well worth many people's time if they're not required to file. In the past, you might have said, hey, maybe it's not worth it. It's not worth my time because I've got to possibly pay someone for help or just go through a lot of pain reading instructions and whatnot. But now you got access to this proprietary software, possibly, many people do, and you can find it on the IRS website by looking up the free file. Therefore, it might be worth, checking out more so than in the past if you had to do it by hand or something like that. All right. Pandemic-related tax topics. Here are a few important things for taxpayers to know this year. Anyone who is eligible for an economic impact payment but did not get the payments or did not get the full amount must file a tax return to claim the recovery rebate credit even if they aren't normally required to file. So obviously there's a lot of questions this year because the economic impact payments went out round 1 and round 2. They tried to send them out based on as much information that they can, but you can think about those payments as basically prepayments that are tied to the 2020 tax return that went out early. So the real thing that it's tied to is the recovery rebate credit that's on the 2020 tax return that's going to be filed in 2021. The IRS gathered as much information as they could to basically prepay that in the form of 2 rounds of economic impact payments. Any errors that took place or any problems with it because of information that they didn't have, because they're going to try to base it on the 2020 information, or mistakes or whatever, then at this point need to be solved by filing the tax return for 2020 in 2021. And again, there's software to do that. Many people, and the biggest problems that people have with the economic impact payment are situations where possibly you have a dependent that was over the age of 17, and so you didn't get anything for that dependent possibly. Maybe that was a student or something like that. Maybe they were a dependent in 2019 and they're not a dependent in 2020. Well, if they file their own tax return, maybe then they would qualify. They would have most likely qualified then for the economic impact payment and therefore maybe qualify for the recovery rebate credit. So you want to start to think about those situations. The people that didn't get an economic impact payment are the people that are basically dependents in some way on the return and who are over the age limit to be a qualifying child. So that's one category. Your AGI, there might have been a phase out for your income was higher, and there was a phase out because your income was higher, in 2020 or 2019 than 2020, and possibly it's lower in 2020 or something, and that might have affected your economic impact payments. So you might have a situation there. So again, where do you fix that? On the tax return 2020. So unemployment benefits are taxable. People should watch their mail for Form 1099-G. In some states, people may be able to get their Form 1099-G from the website where they signed up for the benefits. So many more people are getting unemployment in 2020. The unemployment is taxable, so you should get a 1099-G, and the 1099-G is something that you're going to have to include as a taxable income item on your tax return. So there's a new rule to help people who lost their job and had a change in income in 2020. Filers can use their 2019 earned income to figure their earned income tax credit. If their 2019 earned income was more than the 2020 earned income, this new rule also applies to the additional child tax credit. So this is that weird thing again. Remember, the earned income credit is actually quite complex, even though it's for people for like a benefit program. So the reason it's complex, the reason economists like it, is because it's a benefit program which we want to have, but somehow we want to put the benefit program in so it doesn't incentivize people not to work, right? You don't want to have a situation where if you get work, if you become self-sufficient, then you lose all benefits and you can't, and then you're better off with the benefits than you were. That's obviously not going to be a good situation. So the earned income tax credit is designed so that it actually increases as earned income goes up, which is kind of weird, up to a certain point, and then it goes back down again. So it's kind of a complex calculation to determine what actually the earned income credit is, but tax software helps with that. And that means that, and they're saying, well, in 2020, we might have situations where people didn't work at all or worked less due to the situation in 2020. And we would like to give more of a benefit there. So we would actually let people use the 2019 income if it were higher than 2020. And again, it's really weird, because why would you use 2019 income if it were higher? Because that would usually be a detriment for taxes, since you typically pay taxes on income. So if your income went up, you would think that would be bad. You wouldn't want to use the higher income number. But because it's the earned income tax credit, and your credit amount actually goes up as income goes up, it may actually be good. So therefore, if you qualify for the earned income tax credit, you probably want to use the software, the free file software that you can find, so that you have the proprietary software that's given like a free option. You can find that on the IRS website, and find one that will help you to calculate the earned income tax credit and see within the interview process if it will let you then put in the income number for 2019 and the income number for 2020 to determine which one would give you the bigger benefit. when you're doing the software. Choose e-file with direct deposit to avoid delays. The IRS strongly encourages people to file electronically and choose direct deposit to avoid pandemic-related paper delays. So the IRS has obviously been trying to get people to e-file for some time now, and now this problem with the social distancing has increased the problem. So if you send the paper return in, it will probably take much longer than another return. If you want a refund, that's bad. So you probably want to file electronically if you want the refund fast and give the direct deposit. If you are paying the IRS, maybe not a big problem. So you might just send the paper return in and a good old check to see what happens, just as long as you're avoiding penalties and interest. However, it is kind of nice in either situation to just kind of verify that the IRS has received the return, which you can do more easily with a e-file, and that they have received the check, even though they'll cash it sooner, most likely, if you give them an electronic payment of it. So IRS Free File, there's a link to the free file here, offers online tax preparation, direct deposit of refunds, and electronic filing, all for free. So really great tool here, so you can go to the IRS Free File and check out if you qualify for the options to use the software, and then they'll kind of link you to those software providers from there. So some options are available in Spanish as well. So these products help people find all the tax credits and deductions for which they qualify. How to decide whether to file a tax return. So how to decide whether to file a tax return. In most cases, income, filing status, and age determine if a taxpayer must file a tax return. Other rules may apply if the taxpayer is self-employed or can be claimed as a dependent of someone else. There are other reasons a taxpayer must file. The interactive tax assistant can help someone determine if they need to file a return. So if you're asking the question, do I need to file a return or not? Obviously, the income threshold will be a factor. Filing status will be a factor, because really, kind of the big thing you can think about is from an IRS standpoint, they're saying, hey, if you're under a certain threshold, if you're not owing us any taxes, then we don't really care if you file a tax return or not, right? If you're over a certain threshold, meaning, and that threshold you can think of at least being the standard deduction floor, because everybody gets a standard deduction, then most likely you owe taxes, and the IRS wants to double check that you are then paying your taxes. So you can use this tool to see whether or not you need to file a tax return. But remember, if it says no, you don't need to file a tax return, that does not mean you don't want to file a tax return. That just means the IRS will not come after you if you do not. They will not charge you penalties and interest if you're not required to file. But you will also not be able to get any access to some of the benefits you might have gotten if filing, even though not required to, including possibly an earned income tax credit, other refundable tax credit, the child tax credit, and if you have the recovery rebate credit applicable as well. So if the answer to any of these questions is yes, a person might be due a refund, but they must file a tax return to get their money. So did an employer withhold federal income taxes from your pay? So once again, if you go to this tool and it says, hey, you don't need to file, the IRS says you don't need to file, then your questions are, do I want to file? Question 1, did you have any income in 2020? And did the employer withhold money from your pay? Because if they did, you'll get it refunded if you don't owe any taxes. Did the person make estimated tax payments? If you made any payments to the IRS for estimated taxes, the only way to get that back, if you didn't earn the revenue, like if you're at a Schedule C that just got crushed in 2020 and you didn't make any money in it, and you're saying, do I need to file? You probably still want to file, because if you made estimated tax payments, you're going to get those back, and you may have losses that you could be dealing with as well, that may have benefits in the future, or be taken against other income. So did they overpay taxes in 2019 and have their refund applied to 2020? So obviously if they had 2019 money that they didn't get, but they applied it to a payment for 2020, once again, they want to file to get that refund. Some individuals may qualify for the recovery rebate credit. Most people who are eligible have already received the full amount of the recovery rebate credit as economic impact payments. So remember, the economic impact payments, round 1, round 2, hopefully they came and they got to you properly and you got the right amount and everything. But if they didn't, if anything's messed up and things have changed in 2020 or whatever, then how do you get that benefit? Well, you got to file the tax return. The point that you're going to be getting then will be called the recovery rebate credit. So the recovery rebate credit is the economic impact payment, or in other words, the economic impact payment is the prepayment of the recovery rebate credit, which is tied to the 2020 tax return, which is filed in 2021. Some people may be eligible to claim the recovery rebate credit if they didn't get the economic impact payments or receive less than they were entitled. People must file a tax return to claim the recovery rebate credit, even if they aren't normally required to file. Those who don't normally file taxes can use the IRS free file to claim this credit. So once again, if you're like many people, I get this question all the time. Like, I don't need to file. I never file my taxes. What do I do about this? Because I didn't get the economic impact payment. Well, then you have to file. But it shouldn't be a problem at this point, or it shouldn't be too difficult, because it should be a really easy return, number one, and number two, you got the free file options here. So you can go to the free file and actually use the proprietary software. And if you didn't have any income or anything, it should be, I would hope, I think, be pretty easy to just enter. I know it's kind of a problem to file, to use software if you're not used to it and whatnot. I'm used to it, so. But in any case, there's free software, so that should be beneficial. It should make it easier to do. So the maximum economic impact payment for qualifying individuals were $1,200 per person and $500 per qualifying child for the first payment, so the first one that went out. And then the second round was $600 per person and $600 per qualifying child for the second payment. So if they're eligible for the recovery rebate credit, people will need the amount, any EIPs, economic impact payments, they received to calculate their credit amount using the RRC, Recovery Rebate Credit Worksheet, or tax preparation software. Individuals with an account on irs.gov can view the amounts of the economic impact payments they received. So you can check on the IRS to see what they have on their side of things. If that's different than what you actually received, then you might have some issues. When you file the tax return, you'll have some issues, because on their side, they're going to say that they sent out this amount of economic impact payments. If that's different than what you have, then you have to reconcile that with the IRS. But if the IRS sent you an incorrect amount because they didn't have the information, then that should be fairly straightforward to kind of fix. Where do some of these problems happen? Once again, if you got those qualifying children, if you got the qualifying children that were over the 17, for example, no economic impact payment went to them. If they're no longer children, if they're independent in 2020, then they may be eligible for the economic impact payment if they file their own tax return and would not have received it in the prior year, for example. And then there's the AGI kind of limitations, possibly, where you have the situation where your adjusted gross income was higher, maybe the economic impact payment phased out, maybe your income was lower in 2020, so that might indicate or result in having some more money back from the economic impact payment as well. So some may benefit from the education credits. People who pay certain higher education expenses may qualify for one of these two education credits. There's a link to the education credits here, and they do, even if they don't owe any taxes. So there's a link to that here. There'll be a link to this in the description.